So what exactly is going on with SCHD, the Schwab US Dividend Equity ETF? Year to date, the stock is pretty much flat, and historically, SCHD has routinely outperformed. That's right, outperformed the S&P 500. However, year to date, it's a whole different story, with the S&P 500 returning 19.1% and SCHD losing 0.5%. Is this a warning sign? Does this mean we should avoid investing more into SCHD? Or perhaps it's just not that big of a deal. Either way, I decided to investigate a little further, and what I discovered was truly shocking. So SCHD has been the model dividend ETF, the one that performs the best, the most balanced when it comes to both income and capital appreciation. So when SCHD started to radically underperform the S&P 500 this year, I decided to look deeper. Specifically, the majority of the assets held by SCHD, including stocks like Broadcom, Home Depot, UPS, Cisco Systems, Pepsi, but also lesser known stocks like Paychex, Newmont, Coterra Energy, Darden Restaurants, Tyson Foods, Snap-on, and more. To discover what is the weak link with SCHD, I decided to take a deep dive into the actual underlying stocks, not 1, 2, 3, 4, 5, 6, 7, 8, 9, or 10, but actually the top 50 holdings in SCHD, which represents 95% of the assets. And of course, as customary on this channel, I built a spreadsheet. Here are all of the top 52 dividend stocks in the portfolio of SCHD. Now, this is only half of the number of stocks in the portfolio, which is 104. However, when you look at the percentage of assets, the top 10 makes up 40%, the top 20 makes up 71%, and the top 52 stocks, the 52 I looked at, make up 95.22% of the assets. More than enough, I'd say, to get a firm understanding of what's happening with the underlying stocks. I get it, this looks like a mess. Let me explain what you're looking at. These are all 52 stocks from SCHD that I tracked, 95% of the assets, all graphed assuming that we started tracking them on January 1st or January 3rd of 2023 through July 26th. Now, you should know I did not include dividends reinvested here. It's only 2 dividend payments for most of these stocks, and I decided it wasn't going to move the needle and it would take a lot less time if I could just look at the price history. So I excluded dividends, so all of these lines would shift upward just a little bit when you factor in dividends paid. So all 52 stocks here, and then right here in the middle, this big bold white line right here, that's the S&P 500. And what you'll notice here is of all these 52 stocks we looked at, only 1, 2, 3, 4, 5 of them had better returns than the S&P 500. The other 47 did not. And some of them radically underperformed the S&P 500. Some of the clear outliers here were Key, Pfizer, Allstate, AMCR, and NTRS. The top performers here from SCHD that actually outperformed the S&P 500 were number 1, Broadcom, AVGO, WSO, BX, and FAST. In fact, it looks like the majority of these stocks here, factoring in just the price history, are flat on the year, right around 35 to 40 right here in this cluster. But there's a lot of noise here to be sure, and this is not weighted based on assets in the portfolio. Some of these stocks represent a much larger weighting than others. So let's see if we can filter out some of the noise. Instead of these top 52 holdings, let's look at just the top 20 compared to the S&P 500. A lot easier to read, but you'll notice here, all but 2 of them underperformed the S&P 500. The only 2 that were above were Avgo or Broadcom right here, and then also BX right here. Some of these were pretty close to the S&P 500, but some of them radically underperformed, including Pfizer. And we can even narrow down to just the top 10 assets. Remember that the top 20 represents 70% of SCHD's assets, but just the top 10 right here represents 40%. And we only have 1 stock in the top 10 of assets for SCHD that outperformed the S&P 500. The rest underperformed. But let's not rush to conclusions here. We've got Avgo or Broadcom. Then we've got stocks here in the top 10 like Texas Instruments, Cisco, UPS, PepsiCo, Home Depot, Coca-Cola, Chevron, Amgen, and AbbVie. I don't know about you, but all of these companies are really quality dividend stocks, not ones that I would want to throw away anytime soon. And since the majority of these stocks here are pretty much flat on the year, with the exception of Avgo and perhaps down here the gray one, AbbVie, the majority of these stocks are flat. The S&P 500 is up. So then the question becomes, maybe it's not a problem with SCHD. Maybe it's just something to do with the S&P 500. So I thought about that, and we decided to dig a little bit deeper. So here are the holdings for SCHD, and then I've got the metrics here from the S&P 500. And quick shout out here, this data that I got right here has been reformatted, but it came from Slick Charts right here, slickcharts.com, S&P 500 performance, which is a really cool tool that shows you all of the components of the S&P 500 and their year-to-date returns. So what you'll notice here is these are all of the stocks in the S&P 500, and what we decided to do was take a look at how many of them are in SCHD. They're all sorted right now by year-to-date return. You'll notice here that some of these top stocks, Nvidia, Meta, Carnival, Tesla, Royal Caribbean, Pulte Group, Palo Alto, General Electric, Salesforce, and more are not in SCHD. In fact, the top ranking performing SCHD stock that's also in the S&P 500 is right here. Number 14, Broadcom, with a year-to-date return of 59.73%. But all these other amazing stocks up here, from a performance standpoint, are not in SCHD. And you'll notice that the majority of the stocks that are green on the year are not in SCHD. Of all the stocks that were green so far year-to-date in the S&P 500, 336, only 24 were in SCHD. And of the 168 S&P 500 stocks that were in the red, 30 of them were SCHD, including some of the worst performers in SCHD, like Comerica, Zions Bancorp, Pfizer, KeyCorp, and Advance Auto Parts. When you look at the performance of these stocks, you have to just say to yourself, well, maybe it's not an SCHD problem at all. Perhaps it's just some stocks in the S&P 500 being run up in value, and these stocks don't happen to pay a dividend and are not part of SCHD. Nvidia, Meta, Carnival, Tesla. I mean, guys, these are majority growth stocks that do not pay a dividend. The fact of the matter is, the S&P 500 is outperforming SCHD because their growth stocks are outperforming. So is it really fair to compare SCHD and the S&P 500? Well, not really. When we think about year-to-date performance and the overall price per share of SCHD, we should compare it to some of their actual dividend ETF counterparts. And when you compare SCHD to stocks like VIG or DGRO, VYM, and SDY, it does pretty well. Most of these stocks are in the same range for the most part as SCHD, though some of these that are more dividend growth oriented are going to have better price per share results. Remember, you bought SCHD or you're looking to invest in SCHD for a reason. It's a great dividend ETF, which means it does a great job of balancing income and capital appreciation. So don't freak out about SCHD. It's a great dividend ETF. By the way, this spreadsheet and all of my spreadsheets, as well as my active portfolio and all the changes I make, are available in the Patreon community. If you're interested in learning about that and joining an amazing Discord community, make sure to check out the link down in the description below. Hopefully you found some value in this video. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to all comments left on the day I post a new video. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.